and I'd like to welcome our moderator and speaker for the first session. So can you please welcome the moderator of this session, Mr. Rupesh Acharya, Chief of Finance, Legal and BS, National Payments Corporation of India, on stage. So ladies and gentlemen, sir will be moderating the session, and the topic for this session is profitability and new business model for PayTechs. So now with this, let me welcome the speakers of this session on stage, starting with Mr. Hero Chaudhary, Managing Partner, BEENEXT. Mr. Deepak Thakur, Co-founder and CMD, NPSTX. Mr. Vaas Bhaskar, Principal, Elevation Capital. Mr. Jose Thattil, CEO and co-founder, PhiCommerce. Mr. Bhushan Patil, founder, Multiply Ventures. So gentlemen, at the end of this session, we can take few questions as well, and I give it up to the moderator now.
So very good morning to all of you. I think this is the third and the ultimate day of the GFF, and we were to start at 9:30, but I think the rain god has blessed us, so we started a little late, 9:45. Nonetheless, I think we have a very, very, very interesting mix of panel here. So I have, representation of PayTechs, those we can call as investee companies. We have PhiCommerce here, we have NPSTX, and we have few venture capitalists and those who are managing their own funds. So it's an interesting mix of panel I have. I am Rupesh Acharya. I head, finance, legal and board secretariat function for NPCI group. So I'll start with, the introduction of the panel. So on my left, first is Hero Chaudhary. He is managing partner BEENEXT. Hero is a CFO and is managing partner of the venture capital firm, and is responsible for all the emerging Asia investments related activities. He has more than 15 years of experience, cross-border global investment experience, and he's engaged in nurturing next generation leaders. He helps building, scaling digital economy startups with big total addressable markets across sectors. He holds a Master's of Science in Electrical Engineering from Washington University in St. Louis, and a BTech from IIT Bombay. So originally from India. And he's also an active mentor and leader in the Indian startup community. Some notable investments which he has managed are PhiCommerce, M1 Exchange, Sopse, Jupiter, and M2P. So welcome, Hero, to the panel. We have Vaas representing Elevation Capital. Vaas is a principal at Elevation and focuses on early stage investments in Web 3.0. In fact, I have his, updated intro, so let me just go to that. So he leads fintech and financial services investments at Elevation Capital. Elevation is at early stage VC funds investing actively in the fintech space. They had invested more than 500 millions in the space over the last 2 decades. Elevation has been early investors in Paytm, Acco, Axio, Deserve, Minty5, and many early stage PayTechs, including Jodo, FamPay, Skydo, Uni, Flowbiz, and many such more. Vaas has been with Elevation for 5+ years, and he brings with him overall 10 years of experience in the financial services space, and he was with Bain & Company and Barclays Capital earlier. So welcome to the panel, Vaas.
Thanks, Rupesh.
And I'm sure the conversation would be interesting with you. So next is on the panel is Mr. Jose. He represents PhiCommerce, a very important player in the PayTech industry, and he is representing here, I would say, on the panel as an investee company. So you would have had experience about managing the investments and how it goes for those who are looking for funds. So Jose is a CEO and co-founder of PhiCommerce. He has more than 20 years of experience in the retail payments space. Prior to finding PhiCommerce, Jose was working at MasterCard, Electricard Services, and ICICI Bank. He was responsible for business strategy and headed global solution sales and alliances for the Electra payment suite earlier. He has had cross-functional teams across product management, solutioning, and delivery. Jose is a BE Electronics and MMS Finance from Mumbai University by qualification. So welcome, Jose.
Thanks, Rupesh.
On his left, we have Bhushan, Bhushan Patil. He's founder Multiply Ventures. Bhushan brings in around 20 years of experience in leadership roles across companies like Paytm, Alibaba, Yahoo, and Talisman. He loves fintech, O2O, cross-border retail as sectors. We were having a chat, and he has very interesting views on, how the verticalization or the horizontal, chain of PayTechs can work. So he is an IIT alumni and only Chinese speaker in the team. So if there's any, funds you want to get from China, we have, a way to get there. I think some of the investment companies, where he has invested is Upswing, Freed, if I'm not mistaken, are these companies. And his favorite quote he is putting that, and that's by Jack Ma, with whom he has worked very closely. Today's best performance is tomorrow's minimum requirement. I think that's given for all of us continuously. I think if you look at how the UPI started as a product, and then from there on, the kind of innovation which has happened around it, and the value add which has been creating is the example of that. Thanks for being here, Bhushan. Last and the most, I think, interesting value proposition, which is brought by another panelist of ours, is Deepak Thakur. He is co-founder and CMD of NPSTX, which is Network People Services Technology Limited. He is already listed his venture, and I was happy to look at the performance. He cited the numbers, and I was very, very happy to see the way he took his route to getting to the markets. Deepak is a co-founder and a CEO of NPST, at the helm of one of the first fintech companies to secure listing on National Stock Exchange SME platform. With a distinguished career spanning over 18 years, Deepak has been instrumental in building digital payment ecosystem, driving strategic initiatives within his organization. His illustrious journey includes successful stints at Frost & Sullivan and Spanco Limited, where he contributed significantly by crafting business plans for startups, conducting research, wiring white papers, and business cases for Fortune 500 companies, as well as tech giants globally. Beyond the boardroom, Deepak's determination and endurance are exemplified by his passion for marathon running. So, wealth with fitness, rare combination. A management graduate from JBIMS, he believes in India's story, which stands at the crossroads of innovation and growth curve. So, welcome Deepak to the forum. I think it's an interesting mix. You would have a lot of questions, for the panel. So I'll be, just touching upon certain ideas which probably will make them, speak about the basics, and probably then we can take it as more of a, interactive conversation. So I'll start with Hero, you first. Being, IIT Bombay graduate, you've been globally managing investments and funds. PayTechs, though the subject today is about PayTechs, or in general about, fintechs, we can, slightly expand the subject line here. What has been the global, trend, and what you see the currently, the phase India is poised, and where you see from your the investments globally, are they looking at India, and what it could be for them? So please share your experiences around. Thanks.
First of all, thank you for having me here. I really appreciate it. Coming to this part around global view of how the payment landscape and ecosystem is changing. If you just think about how a consumer lives, or an enterprise behaves, or a government runs in any country, anywhere in the world, and you can see that earlier everything used to be very offline. Over time, things starts to come online, and technology solutions also evolved over time. As the complexity increases in any aspect of commerce that is happening, clearly to support that complexity in the back end, payment system have to evolve. So analogy that I use and the things that I study is it's more like a rock formation in my head. Every few years on top of the rocks, new rocks keeps on forming and so on, meaning technology keeps on evolving, keeps on changing, new things come, and to support them, new payment ecosystem have to come that have to be efficient, faster, better, cheaper. So clearly that evolution we have seen. Now, if you look at the developed market had a lot of infrastructure built out many years ago, so most of the adoption was on the card rails. When you come to the developing market, on the other hand, since infrastructure was not there, and many of the things were also very expensive, adoption of payment ecosystem took very long time.
Yeah, you mentioned about the networks being
Exactly.
very expensive earlier.
Yes. So if you think about this smartphone becoming smarter, better, cheaper over time, that gave a lot of people in developing countries accessibility to things that they wanted to have earlier, but they didn't had it. And especially if I just take the example of India, once Jio came, after that, you had not only the smartphone were there, but you also have access to the cheapest data in the world. And at the same time, this demonetization moment that happened, these few factors came together, combining something that caused India to leapfrog in payments ecosystem way ahead of many other developed countries as we see today. So that trend is happening also not only in India, but in Southeast Asia, where new type of payment form factors are coming. And if I just come back to India alone, India has probably one of the most complex payment ecosystem. You have credit card, debit card, net banking, Aadhaar, UPI, biometric. You can name as many different form factors, and many times if you come,
Still we have cash.
and we still have cash. And if you compare, very simple, if you just compare the payment gateways or aggregator in Western world versus India, in Western world, okay, as long as you take cards and a few other form factors, you are okay. But in India, if you don't have one form factor, let's say you don't have biometric or Aadhaar, and you want to now go and bid for very complex enterprise to win the business. If you don't have one form factor, because of that vulnerability, probably you may not win that business. And that's why you have to build out all those things, right? So that's one thing I see in terms of how things have evolved around the world. Other thing that I noticed is when I was investing before this, based out of New York, systems there on the hardware side, point of sale, in Genco, Verifone, all those build out there, a very complex ISO certification, and pricing of those machines is anywhere between $300 to $600 US or something like that. Now, you talk about emerging market, how can SMBs or the beyond large enterprises, how can they afford it? They can't. So in 13, 14, 15 timeframe, when I was coming to India, I saw very early innovation happening. I remember my first meeting with EasyTap or M-Swipe building out solutions that are like very India specific. And it was really amazing to see how each part of the layer was being innovated in a very unique way. And those kind of trends are happening similarly across in different parts of the world. If we see in our portfolio in Southeast Asia, we see something very similar. So what I'm seeing is as ecosystem and as technology is getting more and more complex, unique solutions are being built out at very country-specific level, and having understanding of those solutions is very important in figuring it out what may work, not now, but 10 years from now, and how to pick up those founders and work with them. And the way India has evolved, I'm very excited. And where it's going, I'm even more excited to see where things are going. So yeah, so that's how I'll classify.
Thanks, I think, he well pointed about, the need for infrastructure to, take off the revolution. And the localization of some of these technologies, need based or maybe country based. So now maybe the question I'm asking is, Jose, about from the you represent the PayTech services, and from a local context, these are the expectations probably, or these are the gaps which they saw. Where do you think as India we stand at this point of time? So how you think the PayTechs have evolved? What are the unique things which probably we can highlight as India, though we may be lacking in terms of some of the the expectations of the global investors. So maybe some Indian flavor if you can add.
Sure. Thanks, Rupesh. So I'll probably answer it on 3-4 different parameters, right? One is from a product direction perspective. As Hero mentioned, if you were to look back over the last decade or so, there have been a plethora of payment instruments, payment mechanisms in the country, right? And most solutions have been reactive, and they've developed siloed solutions to adopt each of these payment mechanisms. Today we are at a stage where there's an enterprise who wishes to support all payment mechanisms because their consumers are all over the country. They probably would do UPI in the metros, and they would resort to Aadhaar payments in the tier 3, tier 4. So you as a business would need to support all of that. However, because of the legacy siloed approach, they're not really able to leverage all of the data at one place. And as we all know, that payments as a rails is a means of getting this data all at one place, and then you extend value adds on that data, right? Whether it's credit underwriting and stuff like that. So you cannot do effective underwriting if you were to see data only through one channel. So therefore, we are great, we believe in the convergence of all these platforms today, all these solutions. And that's been our product philosophy right from day one. We believe that the market, not just in India, but across the globe, various payment solutions evolving. And we really need a platform that can be a one-stop solution, whether it's an online payment, whether it's an offline, whether it's a QR, whether it's biometric, face-based payments is the next big thing. So
Voice,
yes, of course. UPI offline. But you can't be having different APIs, different integrations to cater to all of this. So from a product standpoint, we are great believers in this whole converged omni-channel approach to payments. So that's on the product philosophy. From PayTech in India, on the regulatory side, I'd like to just briefly touch upon that as well. A huge development that's happened over the last few years is the whole PA regulations, right? The payment aggregator regulations. What this has meant is for PayTechs like us, we get a great deal of respectability. Once, RBI has said that, yes, you are a licensed payment player. Because prior to these regulations coming in, they were, virtually every corner shop was a payments operator. So today, there's a sense of responsibility. There's a sense of, whether it's to do with uptimes, whether it's to do with security, whether it's to do with accounting practices, all of that, So I think that's brought in a great deal of respectability to PayTechs in India. And what that also means is once all our processes, our platforms are sort of designed to cater to those requirements, we also now can go overseas in a much easier fashion because we've been sort of validated against the, very strict regulations.
scale also.
Yes, scale as well, yes. So that's on the regulatory side, The other is, of course, from a market scale perspective, I think in India, market is never a problem, right? Volumes are never a problem. So I think, as you rightly said, we build products to withstand scale, to withstand, today we're probably doing 1 million transactions, tomorrow it'll be 100 million, as the case may be. However, as a product person myself, something that we've it's been a holy grail for us, is however large the market is, can the product that we design be able to serve a market of one? Which essentially means that we may have hundreds and thousands of enterprises that we, process payments for. But even if one client of ours wants something unique, can we, without really adopting to major code changes, just through configuration, provide him that? Because it's a huge market, but it's a diverse market out there. So you have enterprises of various sizes and scales with various different business regulations. So I think catering to that market of one is also important in this whole,
Very well put. I think the Indian context has been put really, really well. So we have proven the metal. We have proven that we are not just technologically sound and we can deliver at scale. We can deliver responsibly. I think these are some of the good points about it. My next question would be again to somebody, Vaas, maybe you can touch upon this aspect. We have profitability as one of the words here. So how important is profitability? Well, obviously it's very, very important. There's no doubt about it. But is it just the profit? Because any startup, so there would be many guys who would be here, interested in starting up their own ventures. There would be somebody with a different stage of evolution of their businesses. Though profitability is the ultimate goal, and we have seen, the venture capitalist and the PEs of the world using various concepts like total addressable market. Sorry, Hero, to say that, or GMVs. But is it now, we need to look at some of these from a different context perspective. I think he added that, local regulations could be different. So will it be only pursuit of profit is the thing, or are there any other benchmarks or any other things which the both the startups as well as, the investors should be looking at? So your thoughts?
See, I think it's a fairly nuanced question, and probably 2 points I'd like to make here. One is, I think the answer varies significantly by stage. I think what the answer is for a seed stage company is going to look very different from a company which is a little further down the journey to somebody.
It would be useful that if you can maybe touch upon
100%.
that stage, because that would be I think good value add to all.
Correct. So that's one aspect of it. The second is, as you said, I think these aggregated average metrics obviously hide a lot more than they show. So there is a definite level of nuance which you need to think of at each stage. To maybe elaborate a little bit on that, right? As you think of starting up almost at seed early stage, I would say just focus on what that pain point you're looking to solve is, what is the NPS of that current solution, what is truly broken there. Again, here if you take an aggregate metric like a TAM, etc., most of them in India on Excel, you can get very large numbers. But for a specific audience, I think someone also spoke about vertical solutions, etc. We do think that's where the world is moving. So for a specific niche, what is that pain point you're looking to solve? Can you deeply understand that pain point and start to solve for that, right? Then as you move forward, you build your product, you start putting it out in the hands of the users. I think it's more metrics of customer love and product market fit. And there again, I think more aggregate metrics like a TPV, GMV, number of users, all those typically don't tell you that there is strong product market fit. You probably need metrics a little stronger like engagement, retention, lifetime value, some of those metrics starting to come in. So again, as you start to put the product in the hands of the users, I would say focus more on saying, is the user truly believing in that product? And maybe the right metrics there are more engagement, retention, and more lifetime metrics there. Then I think once you know it's working for a few users, what you need to see is it scalable? Like, can I really get this in the hands of many, many users or for that target group that I'm looking for? There, again, like I think a metric like CAC or metric at that aggregate level, again, belittles a few things, right? So maybe a right metric to look at is what is my CAC for a retained user? Because you could get a very low quality user up top of the funnel. So again, starting to get a little nuance to say this is my priority at this point of time, and this is what I'm looking to solve. And then you get to, and all along the way, you do think of the business model, right? This is not to say you're building this in a vacuum. You do have to see your business model evolve, how all of this comes together. And final business model evolution is profitability, to your point, right? Or ROCE, I think public markets finally value on ROCE. So Um, you start thinking of your business model as you sort of get to PMF, as you sort of think of scalability. And again, in profitability, I think in early stages, there is always a little bit of thinking of profitability at different levels. It's useful to break down, you say GM, CM1, CM2, but again, go to the strictest metric, right? Like load in everything and see what does your business look like. What does your CM3, CM4, I mean, you've seen multiple definitions. So broadest 2 points is I think it's very stage specific. Be very clear at what stage your company is at, what do you look to solve. And for that stage, what is the true strict metric that proves that you've achieved that priority?
Thank you. I think being a CFO, I understand from where you're coming, and it is very, very important that at times you may be out of pocket, but for what you're going out of pocket matters the most. So you need to invest, maybe at least it's very stage specific. So thanks for that clarification.
Actually, Rupesh, one thing which you mentioned was a little bit on funding cycles and where we see industry is. I think these are cycles, right? Like all of us have seen and lived through a few of these cycles. But if you take the more long-term trend, the more secular trend, I think time's on all our side. In the sense, there is low penetration, infra has been built out quite well, regulations are getting clearer. Large companies have proven out that there are business models, right? You take a Paytm, you take a PhonePe, you take a Razorpay, you take a Pine Lab. All of these guys have proven out their sustainable, profitable business models are possible. So I think capital is going to flow. So my word of caution is not to build in this environment with extreme pessimism or with sort of extreme frugality. I think pragmatism is good, but don't be pessimistic and at the cost of innovation, at the cost of truly building some sustainable advantages for your business.
Okay, so there's a lot of money available for good ideas. That's what he is confirming, and happy to hear that. With that, I think maybe I had a question for Deepak to start with now, but with the point and the direction in which this conversation is heading, I'll come to Bhushan first. Maybe he touched upon the aspect of ultimate goal is to reach to profitability, and there are stages of business evolution, there are stages of funding, and ultimately everybody tries to find an exit route on the markets and listing. So Deepak has taken a different route. That's why I flipped the question to you. We've seen some of the larger PayTechs or fintechs getting listed, and the learnings have not been basically the experience has not been good. So what could be the learnings for somebody who's looking at such type of exits, or are there any other different ways in which the things can be managed in a different way?
Yeah, maybe first give a view of maybe what we talked before, horizontal versus vertical fintechs, right?
Yeah, please.
And it's important before thinking of listings and exits, etc. What are you building, right? At least where we stand in India, we have seen many horizontal payment companies built so far that you can pay everywhere, right? And across use cases. And there's a promise of doing that, right? Let's say Paytm, PhonePe, Google Pays, and you need larger kind of investments, benefit to everybody, right? I'm happy to do cashback at a cafe counter versus a cigarette counter or a airport, right? Different kind of personas. And there the ROI is in terms of how many customers, what's the kind of India level impact I'm getting, like it's almost like a UPI-like thing, right? I'm 10 billion UPI transactions. You need that kind of metrics to kind of move the market there, right? And maybe that's where you see some pressures in terms of late-stage companies where if I go horizontal, while I can bring a financial impact, today, for example, if you look at other listed companies or other kind of companies in the same peers, in terms of number of transactions, the value of transaction, maybe possibly these PayTech companies are doing very well. But compared to other metrics, let's say at macro level, they're not there, right? So that's why they're not getting a royalty or a benefit of macro impact. Now talk about vertical fintechs if I look at, and I'll touch upon the exit parts from that perspective also. Well as, if I'm looking, let's say, only credit card payments, only payments for lending companies, or only payments for, let's say, airports or airlines, those become very vertical specific use cases. The ROI can come much earlier because if I'm only doing travel tech, right, and I have to do payments there, I can go very deep and I can topple the metrics of the industry very quickly, Maybe nobody has done that in a travel tech. I can do a very simple pay tech, or look at cross-border, which is an interesting opportunity today. And I'll touch upon some of the numbers. In fact, I don't know how many of people of you know, here know, like India today is building Aadhaar stack in 30 countries. So 30 countries in world are using, going to be on Aadhaar stack. 16 countries are going to use UPI stack, come 3 to 5 years. Now imagine, can these fintechs in India go global? So maybe even if I have a vertical solution, let's say doing only credit card payments, can I go to credit card payments and open? In fact, there are companies in credit card payments trying to get into UAE, etc., where some of these things are happening. So there's huge opportunity to kind of build vertical payments and even topple not just India level metrics of that particular industry, but even go global, go to Singapore and like say, you know what, I can change. I'll give an example what we did in PayTM also. In PayTM, maybe of you will not know, the Japan's largest payments actually run by PayTM, SoftBank and Yahoo, with a company called PayPay. I tried with Alipay to launch Japan. We were not successful. So there was a different kind of nimbleness required to launch Japan, which was right. So today's PayPay, the tech is run by PayTM. Oh, that's very interesting to look at how we can go global just in PayTech, like take cross-border opportunities, vertical fintech opportunities. And the metrics to topple are very different. Like Paytm has a very different battle to look for. Let's say, but if you look at, let's say, credit card payments, there are not many players there. So I can even be always very clear lead winner there, right? So, and let's talk, getting back to an exit perspective. What we're looking at exits also is like, am I going horizontal and looking for a large exit? And maybe most of the investors today might not even have investment appetite because it's a PE or maybe a public marketplace. So if you look at new innovations and exits, so 0 to 1 opportunities like cross-border payment, we have done some investments there. We see like very early stage point where 2 million can become 20, $50 million opportunities, whether it's cross-border. Talk about, let's say, deposit linked payment. We have one of the portfolio called Upswing, what you mentioned before. Like India is a saving first country. How do I deposit money being a one bank account? That's a payment problem first, right? I need to move my money through UPI to put into, let's say, SBI because it's giving me 7% interest rate, or tomorrow federal bank want to give 7.5% interest rate. Can I move that money quickly? It's still a payment tech with deposit as an angle. So I think opportunities from exits there from large scale to small scale, like Cat 1, Cat 3 VC funds, if I have to say so. Cat 3 will look for PayTechs horizontal. Cat 1, Cat 2 like us possibly look at early stage opportunities. Yeah.
Thank you for that, Bhushan. I think, yeah, maybe, my question was maybe not around maybe just the listing, but learnings basically. So there has to be a right stage evaluation, and the metrics could help for that before we, or anybody for that matter, from fintech goes for listing or any other exit route. With that, I think there is an interesting model which Deepak has, is already, proven. So I'll come to you, Deepak. And there was an interesting conversation before this session, and he touched upon a very important point of having a look at the entire payment or any of that process from an end-to-end perspective. So, Deepak, are there any other value-add opportunities or gaps which are not seen generally by the those in the industry, and how can those be addressed? And maybe you can touch upon, the way you have taken your route of, funding and exit also briefly. So that's the question to you, Deepak.
Thanks, Rupesh. Before I begin, really, great value on the dais. I've been listening to them. Amazing. Post this, we have to, sit together and take more. So, before I begin, let me start from the P&L straight away. Okay. So we believe that as soon as you're not happy with the numbers in black, or you see it is slipping to red, let's go back to our customer. Let's go back to our customer and see whether we are aligned with them. And if it's a good customer, trust me, they really want to focus on the core value that they want to bring on table to their customers, and not focus on those non-core activities. And that is the advantage with the PayTech today. Because what happens is, when we say payment has a huge value chain, a financial value chain. In fact, our vision states that, providing digital technology across financial value chain. So I'll touch this with the live example, and that's where, our company has grown. So we have always been traditionally a technology partner to banks, providing them the solution around the payment switches, UPI, mobile banking, IMPS, super app. What happened with one of our largest client, third largest public sector bank is, although we were giving them the mobile banking solution, we realized that the market is moving from purely mobile banking solution to something called as banking super app. Now, what is that? Please understand, a bank has 1.5 crore customer base on their platform. And on the other side, there is a fintech who has great idea, innovation done in their lab, but they don't have fund or they want to see an alternate way to generate revenue out of it. So there is a traditional bank who has huge respect and they have tremendous loyalty. But on the other hand, there is a company which has done certain innovation, but they don't have the customer base. Can we marry them together? So that brings a value add on that super app. Okay, so that is one thing that we did. On the other hand, like I said, we were the technology partner to bank. For about 8 years, we are continuously doing that. We are only evolving our product there. But we asked ourselves a question, is that enough? In the entire financial value chain, where does this go further? So where does bank go now? The bank will definitely take the payment service. So bank is the license holder. However, the innovation happens beyond bank. I mean,
Agree.
there are payment aggregators, payment gateway, or I would say there are so many, bright ideas available in market. Bank has to focus on purely their, accounts, deposits, loans. They don't have time beyond that, but they have the license to operate payment. That is where we started building API Bank, and we took the entire payment stack from inside bank to the outside world. NPCI helped us. We were approved. So we are one of the approved TPAP. So we were TSP, Technology Service Provider. We became third-party application provider. And we started giving the solution which banks are empowered with to the merchants. And that is where, our profitability multiplied. Our revenue doubled in just 1 year. And in fact, this year, within 1 quarter, we achieved 60% of last year's revenue. So, so what happens is, the moment you move up the value chain and you exactly know where the final leg is, and you have your products and your solution aligned with it, you definitely get more out of it. And this GFF, we launched the application, which is for the users. So now we are present right from NPCI to the users directly. So now comes the collaboration. So fintech is all about collaboration. If someone thinks about just keep on building products, I can do everything, I'm sorry. You can have an alternate route. Let's collaborate in the industry, see what best can be done. So if you're building an application for the users, for sure there's a possibility to collaborate and bring those people here. I'll just take the last point here. I'm sorry. I'll take one very strong use case which NPCI launched was UPI plugin. Okay, so that's like a hero product here. I think we can see multiple large entities presenting that they have plugin product. All right, we have been talking about plugin for about 10 months now with NPCI. We took this solution to some of the large merchants in the market, and still it has taken 10 months yet, and they are waiting for a success to happen. Why? Because see, plugin is just a technology to someone to consume. Beyond plugin, who will take care of my chargebacks? Who will take care of my refunds? Is there an automation available? That PAPG has actually taken away the entire load in the PayTech value chain. And the customer is focused on the business. If I give just a plugin, he's not going to look at it because he has to build a stack internally. He has to build operations inside. So it's not going to solve the problem. Plugin has to be aligned with every single solution. So we have 4 tech guys, but we may require 40 other guys taking care of compliances, your operations, automations, which is not necessarily technical in nature. So only then this particular product will be successful. So these are, I think, a few. So there's a lot to discuss on this, but yes, time is running out. So yeah.
Sure. So how much more time? Do we have time for questions. 2 questions, 3 questions at the most. So we can take 3 questions. So before that, I'll just maybe sum it up. So he said, I think the last line, and I'm picking up from that fintech is nothing but a collaboration. And he has said that it's a collaboration of finance, maybe the funding as well as technology. That's the right way of looking at it. And most importantly, what he said is not just the technology or the business proposition. The other nuances, as I said, there are non-technical guys also who are looking at things from a different perspective, be it compliance, be it regulations. So it's a collaboration, and with that only, I think it has grown to this level in India. I think we are at the cusp of a big growth. We are talking here. I will just quote what NPCI's CEO yesterday told, that we're looking at not just billion a day, a couple of maybe or triple billion a day kind of a transaction movement in next 7 years. So there's a big opportunity, and I think thanks for your inputs and the insights on various aspects of funding as well as the fintechs and paytechs. We'll take 2 questions. So this gentleman, yeah, please quickly be very brief. Just tell about yourself, your name and organization, and
Hi.
just to whom you are addressing the question.
Yeah, hi. So my name is Sudeep. So basically, I am a techno-functional consultant. So I'll be more keen to know about which are the pure good models for tech partnership, etc. worldwide. And so India is a very highly regulated market. So you understand BC partnership, vendor partnership, or fintech partnership. So even co-lending, there are a lot of opportunity for working with BFSI. But which are the typical good models in fintech and tech partnership space other than cloud, etc.?
Okay, so maybe I'll ask Hero on.
I'm more keen to understand about business model.
Yeah, so anyone, maybe Hero, Bhushan, or
We
Vaas?
take a shot at it.
Okay, Fee.
So, yeah. As payment guys, we've sort of worked in over 20 odd countries across the globe. And what we've seen is, whether it's banks or other financial institutions, as was referred to in the earlier answer as well, they have enough on their plate already. Working with enterprise clients, working with customers, and that's there. However, from a fintech perspective, I think it's important to collaborate with these institutions and do all the heavy lifting. So if there's a fintech who can go up to a financial institution and say, look, you own the customers, but I power your rails. I do the wires under the table is laid by me. And that's a great synergy, because financial institutions ideally would want such partners who will do the heavy lifting, and whereas they would like to continue focusing on the customer relationship.
Just one point. When you talk about business model, just one mantra, ask yourself, are you a cost center for your customer? Are you a profit center? Or you are a value creator? I think you'll get the answer.
Okay, do we have one more question?
Yeah.
Anybody?
This lady.
Okay. Yeah.
Hi, thank you so much. It was a great session. My name is Bhageshri. I come from Kotak Mahindra Bank into the product and portfolios. There is just one question that I want to ask. When you talk about profitability, when you talk about customer experience, what is that one thing, that one CVP, or maybe multiple, but that one priority that we look on for creating a product? Because there are so much in the market that from a customer point of view, there is so much to purchase or for payments, for everything. So that unique one way to get into the customer's heart, what would be that?
So again, maybe Deepak.
See, you're absolutely right. The industry is completely disruptive right now. India, I mean, you touch fintech, paytech, e-com, you talk about anything.
Anything.
So when we are building a product, let us look at the problem available in the industry right now. And so I will touch with an example on the payment piece.
Yeah.
We were trying to solve the problem of success rate. We're trying to solve the problem of customer dropout. We're trying to solve the problem of better engagement of the customer. And UPI, although has about 10 billion transactions in a month, but the entire transaction is going to about 3 applications, about 90% of the volume.
Yes.
How about reducing that load? So NPCI folks sitting inside and seeing, okay, what exactly we can bring in? The answer is plugin.
Okay.
So the moment you start thinking about, the moment you start thinking about the problem,
Yeah.
and the moment you realize that there is a gap in the industry, and obviously you cannot just stay with one hop in the financial value chain. You have to also see that, is my customer right now in a B2B space, if my customer is taking a particular solution from me, is he going to run around for the other vendors to get the alternate solutions, or is he going to look for the solutions which is going to support my product? If not so, if not so, you're in right place. If so, then you have to start building those layers also. So if I'm giving payment API, there has to be auto reconciliation. There has to be chargeback, refund. There has to be an API driven mechanism to support them on the overall value chain. So that value chain, and at the same time plug in the gap. These are two important points.
Got it. Thanks.
I'll add one thing here, and because the question is come from bank, right? And maybe that's a difference bank and how fintechs think, right? See, what has happened in India, a lot of innovation, especially happened in this space, is getting the bank at the context, in the context. So loan at a pause. So banks expect people to come, कि bank में आके loan लेके जाओ, right? But this paradigm has changed last maybe 5-6 years. It's like you expect fintechs to go in the context. Let's say insurance on the go. I'm sitting at airport, I need insurance there. I'm not going to go to a bank, right? So I think, and there are various opportunities. Now, if you think of being a bank, you want to be more useful for your customers and the spaces are taken, find a distribution use case. Like, for example, if you think, you know what, I'm going to build best payment option, loyalty points, everything, let's say in travel tech, going back. So I think if you unfold yourself from a, let's say, behind a desk versus empowering customer mindset, you will find many use cases in India today where you actually can find a lot of solutions. How do you find sweet spots for bank to be relevant in the context of consumer in his use case kind of a point of view? And all the products for that matter. It's not just payment for that matter. Like I said, insurance, that's why I said insurance. And everything in a context will start making sense.
Just appreciation for the regulator here. I see that banks have started a new wave of empaneling fintech. That's really good, initiative. Secondly, we have also seen that innovation hub being, created. So RBI Innovation Hub. Even yesterday, my team was there in NPCI Design Lab. So these are areas which are only going to bring in disruption, but at the same time, it is going to bring more collaboration with banks, obviously. And that is what I really look forward. Thank you.
Thank you so much.
So
Dan.
maybe to sum it up, actually, if technology is king, customer remains the queen. Okay. So understand the customer well, and you will find the solutions. I think with that, I think, okay, one last question, maybe, please. And that's the last one. Be very...
Sir, if you're okay, we can take it offline because we are running very late.
Yeah. Be very brief.
Okay.
Good morning, all. It was a nice listening to you all. I work for Patanjali Group. I take care of alliances and partnership with fintech banks. Am I audible?
Yeah, please.
Yeah.
Yeah.
So we are talking about profitability. So what are the two basic parameters as a merchant when I partner with some fintechs and with time new technology coming and some technology getting outdated? So at what time a fintech or a financial partner need to understand, is it time that he need to wait for that profit to come, or when to decide for that collaboration?
I couldn't get your questions very clearly.
I am talking about like credit card on UPI.
Okay.
So when UPI came, debit card transaction reduced like 59 to 60%. Similarly, on credit card and UPI, you know what people are facing and how the future is going to be. Similarly, it will have impact on POS and POS transactions also, because there will be no plastic to use.
Okay, so
The merchant we have partnered.
you basically, if I can sum it up like quickly, you're basically saying there's a disruption and how one should be, aware of, what is getting disrupted.
If I have a technology in place and I don't know what will be coming next, so is it going to die? And at what point a company need to collaborate so that it remains sustainable?
Okay. Okay.
Consistent innovation is the only way to do it. I mean, see, let's look at this. If you are working on your example, your credit card on UPI, you know that it is going to come, right? It is driven by regulator. It is driven by this central body in India. There is NPCI who is doing a fabulous job. Then in that case, it is bound to come. So I don't think you can just have a technology team inside or you can just have a product team inside. You need few set of guys separately in the strategy and innovation who only look for the 2 years, roadmap. So I don't think there is a right time that you can define right now, but you need to have the right stack before time so that you are present in the market during that time. So if you know there is the plastic will go out, then go virtual. You have to plan that in advance. So I think it's purely related to your internal strategy.
That's it. So what exactly a POS machine company will do when a POS machine company will collaborate?
Sir, I think the question needs a lot of time to be
Why
answered.
don't
It
you
will
sit
be
with me
unfair.
and
So we can
I'll give you
take
more
this
idea.
offline. I think I'll hand it over to the organizers. Thanks for this interesting conversation, guys, and hope you all had a good time here. Thank you.